Hi, this is Ray Thomas with Keller Williams Premier Properties. I'm here today with my good friend Glen Marino with First Centennial Mortgage.
How do I get rid of my private mortgage insurance? Very good question. A lot of people ask that question. Let's go to FHA first. FHA has their term for private mortgage insurance is going to be called MIP, Mortgage Insurance Premium. There's so much of it that you're paying upfront at the closing, and there's so much that you're paying on a monthly basis. The bad news for FHA is that there is no cancellation of private mortgage insurance. It stays on there for forever. So how do you get rid of FHA MIP, Mortgage Insurance Premium? You have to refinance. Okay. So with FHA, it's a refinance to get rid of your private mortgage insurance. And you should look at that. When you start to feel like, hey, I've got at least 20% equity, going back to that, most lenders will make you a loan at 80%. When you got 20% equity, definitely look at your FHA loan and definitely look at refinancing and getting rid of that mortgage insurance premium. In some cases, it could be $100 to $200 a month that you're saving all of a sudden. Okay? Yeah. Now let's go to conventional. Conventional, there's two rules that we have to keep in mind. One is what rule is imposed on the lenders, what rights are given to the borrower. So let's deal with the lender first. The lender must cancel private mortgage insurance when the loan balance, which is going down every month, right? They're making monthly payments. The loan balance is going down. When that loan balance, Freddie, gets down to 78% of the original purchase price, 78% loan to value, that's when the lender must cancel the private mortgage insurance. That's a fail-safe put into the law to protect the consumer, that if the consumer never asks, say, hey, lender, cancel my private mortgage insurance. So the lender's required.
How does the lender know that you have reached that 70? Do they have any kind of system in place to find that out?
Good question. Their computer systems have into the system the original purchase price, say $100,000. And so their computers also are keeping track of what your loan balance is, right? Every month you're giving them a payment and they're knocking it down. So their computers are tracking when the loan balance compared to the original purchase price 5 years ago, if it gets down to 78% loan balance to original purchase price, then they send out a notice saying we're obligated by law to drop your private mortgage insurance. Okay? So now let's go to what rights does a borrower have? Borrowers have the ability that when they think that their loan balance, remember it's going down, if it gets to 80%, remember the lender at 78, at 80% loan to original purchase price, original appraised value, it's down to 80% of the original. Again, their computer systems have it in there. The borrowers can keep track of it themselves too. Now again, they're not going to necessarily get a notice from the lender when they get to 80 because they'll get that notice at 78, but at least the consumers are going to get an annual notification from the lender saying, hey, you have a right. You have a right to cancel this private mortgage insurance if your loan balance is 80% or less compared to the original appraised value, original purchase price. Okay. So that's when they can drop it. And obviously, they can also drop it if they were to refinance. They don't have to necessarily wait to get to the, in today's marketplace, rates are very, very low. People are coming in and they're refinancing. Property values may have gone up a little bit. They paid down the loan for several years. They might show now that they've got 20% equity and they can drop the private mortgage insurance through a refinance. Now here's another thing too about refinancing. Remember, if they only put 5% down, insurance companies work on what's called a risk-adjusted basis. Somebody only puts 5% down, it's a higher risk to the bank. They're putting out 95% financing. If somebody puts 10% down, they're only putting out 90%, less risk. If someone puts 15% down, so the bank is only financing 85%. So the insurance premium goes down, down, down the more somebody puts a down payment.
Okay.
So my point here is that when they refinance, if they were had only 5% down, they had the highest private mortgage insurance premium, maybe they don't have a full 20% equity that they can drop it all together, but if they can lower their interest rate and move their risk factor down, move their premium down from the 95% category down to the 80 to 85% category, they might save not only in the principal and interest category, but they might save $50, $75, or $100 on the private mortgage insurance premium. So, Freddie, how do people get a hold of you if they want to further discuss this, or if they want to have you take them out to look at some dream homes? How do they get a hold of you?
If they would like to know more about this, they could go to my YouTube channel, subscribe to my YouTube channel, or follow me on Facebook, or they could call me at 630-344-9715, or email me at buyandtosell@gmail.com. It's BYUNTOSELL@gmail.com. And Glenn, if they would like to get in contact with you, or if he would like to contact you, what's your information?
They can contact me because I'm part of Freddie's team. You can contact me, Glen Marino, at First Centennial Mortgage. My phone number is 630-788-7859. And my email address is G, my first initial, then .Marino, M-A-R-I-N-O, at gofcm.com. We appreciate you being here today.
Thanks for your time.
Have a great day.
You too.